Hello, this is Jordan. This video is being recorded on the early morning of Thursday, November 3rd, 2022. Thank you so much for joining me. In this video, I am going to take a quick look at two gold sentiment indicators. And I wrote a little bit about sentiment in an editorial I posted at TheDailyGold.com yesterday, looking at what happens at major bottoms in the market in terms of sentiment. Now, this is the Gold Optix from sentimenttrader.com. It's fairly similar to the daily sentiment index. So I don't think the data is all that different. But something else I discovered here is a way to look at the data and use moving averages on their site. And so here you see the optics, the sentiment is in blue. And the moving average there, I think that's in orange. It's not the easiest thing to see with those two colors. At least for me, I'm colorblind, so identifying some colors is difficult for me. But anyway, more importantly, I looked at this data going back 20 years and looked at a 20 period moving average, a 50 period moving average, and a 100 period moving average. And I think it's daily data, by the way. But so looking at different moving averages all the way up to a 100 period moving average, and basically where we are right now, you can see, this is a 50 period moving average. It's very similar to a low 2001, 2013, then at the very end of 2015, 2018. Those are, in terms of sentiment, those are the most significant bottoms over the last 20 plus years. That's when gold has been the most oversold. Now, obviously, 2008, gold wasn't as oversold for as long of a period, so that doesn't come into play. But I just thought it was interesting because when you're looking at this, whether it's a 20 period, 50 period, or 100, they're all very similar. They're all very similar with respect to 2001, 2013, end of 2015, 2018, and right now. They're all very similar. Here, the 50 period moving average, you can see that line that I believe is at 30, that horizontal line, that's basically all these lows that I mentioned for those different points. Again, 2001, 2013, end of 15, 2018. Those lows are all basically right at 30 where the line is. And that's basically where we are right now. Now, there is a 200 period moving average. That one we're not quite here and now. We're not quite as oversold as we were, I think, at 2015. Now, you can see, obviously, that was the end of a real bear market, so that's when sentiment's going to be the worst. So anyway, long story short, when we look at the optics and we look at most moving averages here, based on this, gold is where it needs to be to have a significant low. Now, the net spec position, net speculative position, this is all the non-commercial positions divided by open interest. So that's why I get the net spec position. Last reading came in at 17.5%. The low a month ago or so, that was around 13%. This is not quite where it needs to be yet when we're looking at major bottoms. So again, we're only focusing on the last 10 years, but you can see 2013, end of 15, 2018, those three significant lows, those are around zero. Even interestingly, that 2018 low, the net spec position was negative. So in other words, the speculators were actually net short. The commercials were net long, which is rare. But you have seen, and I think at the end of 15, they were net long by a hair. But basically, looking, and I drew a line there at 5%. That's when you get down to that level, you're basically at or near a major low in this market. So, looking at gold, technically, it has about roughly, $90 or $100 downside. There's a confluence of strong support in the mid 1500s. So that's something I'm thinking about. If we see gold continue to trend lower and test that strong support, where's the net spec position? I think it's going to be pretty close to zero. And I've been meaning to, I wanted to look at those three lows, the three vertical lines, and how quickly gold how quickly the COT went from around where it is now 15 or 20% down to zero. How quickly that happened, and how much downside was required in the gold price for that to happen. So I'm sorry I did not look at that, but I will have that soon, likely in a premium update. But that's just my thinking. Sentiment is, you look at the optics and probably the DSI. I mean, those things are, gold's pretty close to where it needs to be in terms of bearish sentiment. But this is the bugaboo, the net spec position. And we just look at the way the market's been performing. I think more likely than not, you're going to see gold bottom when that position. I mean, the position is going to have to get down near zero first. And that's, look, and the difference between 2013, end of 15, 2018, it's the fundamentals. And we're coming into a good fundamental situation because every time the Fed stops hiking, that's when real interest rates peak and they start to roll over. And so fundamentally, we're not quite there yet because we know the Fed's going to hike a little bit more, but there is the setup. I mean, this is setting up where this is going to be a very significant bottom. Not maybe. I mean, it's probably going to end up being more significant than, 2013, 2015, and even 2018, where gold went up 85% in 2 years. I mean, especially if we see a real recession, we see the S&P go below 3,500, you're going to see gold, begin a multi-year, not only a cyclical bull market, but, that's going to be the start of a secular bull market. So long story short, looking at sentiment, we're getting really, really close. Optics is where it needs to be, looking at the moving averages there, but the net spec position needs to come down some more. So maybe if we see gold go below 1,600, that's when we could probably see all these sentiment indicators hit real major extremes that are in line with past bottoms in gold. All right, let me know what you think. Thanks so much for tuning in, and I'll see you guys again in the next video.